Everyone wants to build wealth. But most are playing the wrong game. What if the real secrets to wealth weren't taught in school or shared on social media? Today, we're pulling timeless lessons from the world's greatest financial minds to help you think differently, act strategically, and finally take control of your financial destiny. This is Trend Tech Invest. Let's go. Everyone's shouting about saving more, avoiding debt, and investing early. But guess what? That advice is everywhere, and it's not enough. If you're watching this, you're probably not looking for basic financial tips. You're looking for something deeper. Because the real path to wealth? It's less about how much you earn, and more about how you think. Today, we're diving into the best wealth building advice. 1. Income alone is not enough. Let's get one thing straight: a six-figure salary doesn't guarantee freedom. In fact, many high earners are just broke at a higher level. They lease their cars, swipe their credit cards, and upgrade their lifestyle with every raise. Why? Because they never mastered their financial environment. Wealth isn't built on income, it's built on margin. The space between what you earn and what you spend. And more importantly, it's built on how you use that margin. As Buffett famously put it, do not save what is left after spending, but spend what is left after saving. Money that sits still gets eaten by inflation. But money that moves, with intention, multiplies. 2. Think like a capital allocator. Here's a mindset shift that changed everything for the wealthy: stop thinking like a consumer. Start thinking like a capital allocator. Every dollar you earn is a worker. If you leave it idle in a low-interest account, it's unemployed. If you put it to work, through smart investments, it grows. Some dollars are your bodyguards, cash reserves for safety. Some are builders, invested in ETFs, index funds, or real estate. Others are hunters, seeking asymmetric returns in startups, crypto, or AI. This is how Buffett became one of the richest people on earth, not by working harder, but by allocating smarter. The stock market is a device for transferring money from the impatient to the patient. Buffett didn't get rich by chasing hype or timing markets. He got rich by understanding value, and letting time do the heavy lifting. Here's what most people miss: investing isn't about finding the next Tesla. It's about compounding, a quiet, powerful force that multiplies small decisions over decades. Start early, stay consistent, and focus on owning good businesses, not just ticker symbols. Buy assets you understand, at a good price, and hold them. Charlie Munger, Buffett's lifelong partner, is known for mental models. But one of his greatest insights? Avoiding mistakes is more powerful than chasing brilliance. That means, don't panic sell during downturns. Don't invest in things you don't understand. Don't live above your means. Most people lose money not because they're unlucky, but because they're undisciplined. Stay rational, avoid emotional decisions, and let compound interest do its work. Charlie Munger adds to this with one of his most famous quotes: "The first rule of compounding is to never interrupt it unnecessarily." 3. Cash flow is king. Forget net worth for a moment. Ask yourself, what's my monthly cash flow? Net worth looks great on paper, but it doesn't pay the rent. Cash flow gives you options. Options give you freedom. Whether it's rental income, dividend-paying stocks, digital product royalties, a SaaS tool you built, or even YouTube ad revenue, these are the assets that pay you even when you're not working. Your first goal? Earn just $500 per month in passive income. Then scale that. Eventually, your investments should fund your lifestyle, not your paycheck. Naval Ravikant puts it perfectly: you're not going to get rich renting out your time. 4. Your network is your treasury. Here's a secret the wealthy know: your network is your most underutilized asset. Deals, partnerships, new ideas, they rarely come from isolation. They come from people. Build relationships before you need them. Give more than you ask. Be the person that others want to work with. As Peter Lynch once said, the person that turns over the most rocks wins the game. But often, the best rocks are other people, mentors, collaborators, communities. Real wealth is built in rooms you earn your way into. 5. Own more than you owe. Let's talk ownership. In today's world, most people rent everything. Their home. Their car. Their software. Even their time. But the real wealth builders? They own more than they owe. They own businesses, stocks, intellectual property, content, and systems that make money while they sleep. Ray Dalio reminds us, if you don't own gold, there is no sensible reason other than you don't know history. It's not about gold, it's about owning stores of value. Assets that survive across economic cycles. So flip the script, stop renting your life. Start owning your future. 6. Know the rules of the money game. Ray Dalio built the world's largest hedge fund by understanding cycles. Markets rise and fall. Economies expand and contract. The average person? Completely unprepared for this. Dalio teaches, diversify across asset classes. Prepare for inflation, recession, and currency changes. Study history, it repeats more than you think. Don't just invest, understand the system you're investing in. Peter Lynch turned Fidelity Magellan into one of the most successful mutual funds ever. His secret? Retail investors can beat Wall Street if they stick to what they know. You don't need an MBA to spot opportunity. You see trends at the grocery store, in your kids' tech habits, or at your job. If a product or company is growing and loved by customers, you might have an edge. Don't invest blindly. Observe, think, and then decide. 7. The unsexy truth, boring builds wealth. All 5 of these legendary thinkers, Buffett, Munger, Dalio, Lynch, Ravikant, they have one thing in common: they didn't chase the next hype. They mastered the boring basics: long-term thinking, risk management, consistency, ownership, leverage. Real wealth? It's not built with lottery tickets. It's built with boring, powerful systems that run on autopilot. So here's the truth no one told you: wealth is not a salary. It's a system. It's built through small decisions, made consistently, and guided by a mindset of ownership, leverage, and intentionally. Start now. Think like a capital allocator. Focus on cash flow. Build leverage. And own more than you owe. If this video gave you clarity, give us a like, hit subscribe, and share it with someone ready to build true wealth, starting today. This is Trend Tech Invest. Thanks for watching, and we'll see you in the next one.